Hello and welcome to the Daily Past. In today's episode, we're diving into an important statement made by the Governor of the Reserve Bank of India, Shaktikanta Das, regarding the topic of de-dollarization. As global discussions heat up about moving away from the US dollar, the RBI Governor has clarified where India stands on this issue. Let's break down what Das said, the concept of de-dollarization, and what this means for India's economy and future. Recently, RBI Governor Shaktikanta Das made headlines when he stated that de-dollarization is not the main goal of the Reserve Bank of India. This remark comes at a time when there's growing interest worldwide in reducing reliance on the US dollar, especially due to rising geopolitical tensions and changes in global economic dynamics. But what exactly does de-dollarization mean and why is this such a hot topic? De-dollarization refers to a country's attempt to reduce its dependence on the US dollar in international trade, financial transactions, and foreign exchange reserves. In simpler terms, countries are looking for alternatives to the dollar, such as their own local currency, the euro, or even the Chinese yuan. This movement gained momentum as countries worry about the US dollar's global dominance, which ties them to US monetary policies and makes them vulnerable to sanctions or shifts in the dollar's value. De-dollarization, therefore, is seen as a way for countries to protect their economies from these external pressures. Now, according to Shaktikanta Das, the Reserve Bank of India isn't actively pursuing de-dollarization. Instead, the RBI's focus remains on stabilizing and strengthening the Indian Rupee, INR. This approach is about ensuring the rupee holds its value in both domestic and international markets, while managing India's foreign exchange reserves in a way that supports economic stability and growth. Das made it clear that the RBI's job is to focus on the rupee's stability and not to chase an agenda of moving away from the US dollar in India's global dealings. The statement sent a message that while India is aware of the ongoing global discussions about reducing dollar dependence, the RBI is not focused on making drastic changes in this area. So what does this really mean? Let's break it down further. 1. Focus on national currency stability. Shaktikanta Das' statement brings the conversation back to a fundamental principle: currency stability. For the RBI, the primary task is to ensure the rupee remains strong and stable. This is crucial because a stable currency builds trust both among Indian consumers and investors, as well as international partners. In fact, managing a stable currency is one of the main ways the RBI can support India's economy. Whether you're buying groceries in India or negotiating a trade deal with a foreign country, the rupee's value impacts everything. If the rupee is stable, it inspires confidence in India's economy, both at home and abroad. 2. Strategic reserve management. India holds significant foreign exchange reserves, and much of that is in US dollars. This is not surprising, as the dollar is still the world's dominant reserve currency. The RBI's responsibility is to manage these reserves to ensure that India is prepared for any unexpected economic challenges like a global recession, a sudden rise in oil prices, or a financial crisis in another part of the world. While some countries are actively trying to reduce their dollar reserves, the RBI's approach is more cautious. It's about managing these reserves wisely, not about making sudden moves that could destabilize India's economy. Across the globe, several countries, such as Russia, China, and some European Union members, have been exploring alternatives to the US dollar. They are looking to shift away from the dollar in international trade, whether it's by trading in their own currencies or adopting the yuan or euro. Despite these efforts, the US dollar remains the dominant currency, used in approximately 80% of global trade and held in around 60% of central bank reserves worldwide. So while countries may want to reduce their reliance on the dollar, it's clear that no currency, including the Indian rupee, is ready to challenge the dollar's position just yet. This is likely why Shaktikanta Das has emphasized that the RBI's approach is pragmatic. Instead of trying to fully de-dollarize the Indian economy, India is likely focused on gradual diversification of its currency reserves. This allows India to reduce some exposure to the dollar without destabilizing its economy or upsetting global markets. India has been active in securing trade agreements with countries like Russia, Iran, and certain Southeast Asian nations where local currencies or alternative currencies are used instead of the US dollar. However, these agreements are more tactical rather than part of a larger, ideological move against the dollar. India is not looking to abandon the dollar entirely, but rather to diversify its trading partners and currencies where possible. This helps to reduce risks tied to the dollar's dominance, while still maintaining the broader stability of the global financial system. Another key point is that the RBI is acknowledging the current structure of global financial markets. The US dollar's dominance is not just a result of political decisions, but also due to the size and strength of the US economy, the liquidity of the dollar, and its widespread use in global markets. India's own economy is growing rapidly, and as India's influence on the global stage increases, the rupee could see wider use in the future. But this will take time, and India's approach is likely to be gradual. The RBI, does not want to take any extreme steps that could disrupt its economy, especially considering the volatility in global markets. So, what are the implications of Shaktikanta Das' comments? 1. Economic and financial stability. By not focusing on de-dollarization, the RBI is emphasizing stability. The goal is to maintain a strong and stable Indian rupee, which is crucial for India's growth and financial health. In a world where global markets can be volatile, India's priority is to ensure that the country's currency and reserves are well managed and robust. 2. Global engagement. India's financial ties with the global market will continue to evolve, but there will be no sudden, drastic departure from the US dollar. India's partnerships, especially with the IMF, the World Bank, and other multilateral institutions, will likely continue in line with the global system, one that still revolves largely around the dollar. While the RBI isn't focused on de-dollarization, that doesn't mean the Indian rupee won't play a larger role in the future. As India's economy continues to grow, we could see more countries willing to accept the rupee for trade and investment, particularly in India's neighborhood. However, this process is expected to be gradual. India is likely to remain focused on strengthening the rupee and expanding its global influence step by step, not through sudden or radical shifts. And that wraps up today's analysis on de-dollarization and the RBI stance. It's clear that while India isn't looking to challenge the US dollar just yet, the future of the Indian rupee could still be exciting. What do you think? Do you believe countries should move away from the US dollar, or is it too risky? Let us know your thoughts in the comments below. We'd love to hear your opinions. Thanks for tuning in to the Daily Past. Don't forget to like, subscribe, and click the bell icon to stay updated on our latest videos. Until next time, stay curious, stay informed, and keep watching the Daily Past.